Okay, so I want to waste everybody's time. Good day, everyone. We're happy to have everyone in here. My name is Blessing Elliott. I'm the brand and marketing executive at FinCrime. And we meet today are amazing speakers that will be sharing us insight and giving us directions around FinCrime and fraud management. Before I introduce the speaker, I'd like to thank the sponsor of this webinar, who is InfoPipe. InfoPipe is an information security company dedicated to providing end-to-end cybersecurity services, solutions, and products that caters for all business across the globe. InfoPipe's team is dedicated in delivering exceptional services which help organizations mitigate risk, safeguard critical data access, and maintain strong cybersecurity posture. They leverage on latest technologies and industry practices to deliver cost-effective software solutions and comprehensive IT infrastructure to organizations in multiple sectors. InfoPipe has established a strong brand presence in multiple continents, and they have offices in Nigeria, United Kingdom, and Australia. InfoPipe understands the importance of cybersecurity safety and the constant evolving trends. And that's the need why they brought up this webinar to give us more comprehensive knowledge around fraud. So without further ado, I'm going to be introducing our speakers. I'm going to start here with John. John Marsden is an experienced professional who oversees coordinates operation in Europe, Middle East, and Africa region. John focuses on tackling fraud and financial crimes for client businesses with a career spanning for over 20 years, and his expertise encompasses areas such as identity fraud prevention, anti-money laundering, and counter-terrorist financing. John works in Fraud.net, and Fraud.net operates first end-to-end fraud management and revenue enhancement ecosystem, especially built for digital enterprise and fintech globally. And John is going to be taking us through what fraud is, the total cost of fraud, the fraud protection, and zero-sum games. John is also going to be taking us around fraud trends globally and how we can protect them, and the difference between fraud and AML, that is anti-money laundering. Also, I have here with me Gbolabo. Gbolabo is a tech management strategist and a cybersecurity specialist with over a decade of experience in designing, developing, and managing secure information system and enterprise infrastructure. Gbolabo is currently the VCSO and the country manager at InfoPipe, and Gbolabo is going to be taking us through unveiling fraud in financial tech industry and the emerging trends in FinCrime. But before we go into with the speakers, we are ensuring that this session is going to be interactive as possible. So we are going to be launching the first poll. We are going to be asking you people interactive questions in between our sessions, and we hope we get the best responses from the audience. So the poll for today is, we hope you people participate and give us answers. Okay, so the poll is, how familiar are you with emerging trends in financial crime? And, quite a number of people are familiar with it, while some are not so familiar with it. And with this, I will let Gbolabo come and take the seat.
All right, thanks a lot, Blessing, for an introduction. It's always a pleasure to be here. Blessing, if you don't mind, can we put in presentation mode? So it's while we close out on the polls.
Sorry, I'm coming.
Just below your InfoPipe logo. Just slide down. All right, thank you very much. Are we still running on the, are we still running the polls? No, I think you need to go back to the way you were, and then you put on slide mode, and then we kick off. Yeah, so there's below your InfoBribe logo, you see the slider there. Just right below, not that one, yeah, that's below the logo itself. Yes. All right, so are we done with the poll?
Yes. Sorry, however, it is on play as against.
Okay, all right, then it's fine. Then we can stay, let's stick to, all right, so unveiling fraud in the fintech industry. So it's I would say fraud has always existed. It used to be an issue, but the difference in the past is, I think, organizations, financial institutions, fintechs, all organizations, we felt, was something we could sweep under the rug, or an issue we could deal with organically or internally. But now it's becoming a pandemic because, to an extent, if organizations are not intentional about managing fraud, then it's impacting your reputation, it's impacting your revenue, it's leading to loss of customers. And, how it works is just like from a cybersecurity perspective, as businesses are going digital, the bad actors are going digital, the fraudsters are going digital. And for the cases of fraud, in the fintech space, it borders around, transactional identity, especially identity, and, even the whole organization itself based on their function. So obviously, based on the growth in the fintech industry, fraud is quite prevalent, security issues are prevalent, and that's why, we think it's very critical for us to be speaking about this, for us to come up with measures to ensure we can curb fraud and manage it effectively, at different organizations. Please, next slide. I would say easily that, amongst a lot of fintech groups today, it's a conversation that we keep having, especially to the extent that, the fintechs are now agreeing that, they need to collaborate to fight fraud. I'm hearing something about a blacklist being created, and so those are like first steps, organic ways of managing it from an industry perspective beyond, the controls, or services you should subscribe to help you succeed with it. So now we'll be talking about types of fraud. A lot of us know some of the types of, or different types of fraud, but we'll be highlighting some now. We have payment fraud, transactional fraud, stolen identity. It could be internal, it could be external, loss of revenue for the organization, or loss of revenue from a customer perspective. Identity theft. Identity theft is a bit overwhelming because, you sit one day and you hear you are owing so much money. Someone has used your identity to either subscribe to a service, or has put you as a next of kin or as a referee that would, speak for them if they, they don't go according to the plan, especially for lending. So today I hear about cases where people are harassed to pay back lenders. Meanwhile, their identity and their details were used to subscribe to for a loan. So identity theft is really, really crucial. And I know a lot of fintechs are, putting measures in place, and it's a bit of a worry for them. Loan and credit card fraud. This is, especially for credit card, probably one of the oldest when it comes to fraud, even before digital became overwhelmingly digital. And now it's even more, because now we get to put our card details on different platforms, and, internal fraud too in different organizations. And before you know it, you've lost some funds before you now start fighting back to get it. Phishing and social engineering, this is overwhelmingly prevalent across all levels. I know there's been a lot of education, user awareness, with regards to phishing and social engineering. But yes, it's still a major point of fraud. People get notifications today on WhatsApp about some organization or some Zoom group, or even they use religious angles. Maybe they say a church group, and they ask you if you get a code and share the code, and they take over your WhatsApp, or then they have access to some of your, platforms to be able to move your funds. So organizations need to be able to curb this, be able to have controls in place to know this is an anomalous approach or an anomalous transaction or an anomalous query, and you should be able to block such. Insider fraud, the most embarrassing of them, employees of a different organization, based on loose policies on access control and privilege access, they gain access to critical infrastructure and can make some adjustments to the business logic of some of their services and move money or give people access to be able to move money. And for some organizations, it's too late and they get chasing back to try to recover. Money laundering, this is a bit intentional. Either fintechs being set up to launder money without the clients or customers knowing, or clients and customers laundering money without the fintech or organizations knowing. Controls need to be put in place to be able to curb this. Next slide, please. And what we're looking at from the landscape, so as part of what we are saying, so we have some, based on research that we did, so we have some statistics. So for KYC, according to Smile Identity, a KYC provider, fraud attempts increased by 50% between, so definitely the more digital we became, the increase in fraud. And, what fintechs know and they try to do today is improved KYC. So there's that thin line between onboarding customers, making it easy for them, but having actual details. So, but what's happening is with KYC, fraudulent clients or customers are putting in the wrong credentials or details. So when they carry out their activities, they can't be tracked effectively. And that's happening with lending and some other services. So, that needs to be fixed. We also got some other statistics from MTN, mobile money, their partnership with financial institutions, and fraud perpetrated through the customers of the banks on their service, which means, the financial institutions need to put specific controls in place, which is effective fraud management service to be able to curb this. Also, FITC, disclosed issues with banks in Nigeria, the amount of money lost to fraud. So a lot of these cases are buried and not put out there. But now, it's, like I said, it's becoming a pandemic, and, it's important we talk about this. It's important, organizations start looking for ways to ensure, they can curb fraud and, at least to a very good minimum. And, as their business grow, they can keep, give their customer that comfort that, their funds are safe, their business is safe, and, they too can continue to run their service, for a long time. Next slide. I think at this point, I'm going to hand over to John. John is a specialist when it comes to fraud management and services. Okay, yeah, so before I hand over to fraud, just emerging trends. So did you go back? Okay, so the slides is playing again, so guys, so pardon us and enjoy the view again. So, but yeah, definitely John is taking over next, and John is going to be talking to us about, methods, approach, services, that we could subscribe to, to curb fraud. Also, this is talking about emerging trends in the financial crime. So from the old school online banking fraud to mobile money that's not so new, to investment Ponzi schemes, this Tingo comes to mind. Payment card fraud, which we know, business email compromise, which from a security perspective, and the new one, Web 3.0. So, the whole concept of Web 3.0 is supposed to be a secure, infrastructure and platforms. But then again, the way it is based on your knowledge of the technology, you can also leverage, to beat and cheat the system and cheat customers or cheat partner, fintech partners that are working with your services. So, so John will be giving us some insights into this, and, what services, what controls should be put in place to curb, fraud generally. All right, so take it away, John.
Thank you. I don't know if you want to do the next poll before we get into this. Yeah, okay.
Okay, guys, so we'll be showing up the next poll now. We intend that we want this to be as engaging as possible. And this poll is asking, can a FinCrime platform effectively cover both fraud and AML? Okay, so we are getting responses. A lot of people are saying, yes, a FinCrime platform should be able to cover both effectively, while some are not so sure.
overwhelming feel it should cover both, which is fantastic.
I agree. I'll hand over to you, John.
Thank you. Okay, so what I'm going to cover, first of all, is the most important thing in terms of what we do as an organization. We can't change the world. We can't change society. We know that social media and connectivity has enabled the criminals to practice and grow their game. It's recruited more people and continues to. So what is the total cost of fraud for an organization? And then from that, is it a zero-sum game to invest in fraud protection? I'll leave that for your decisions. We'll go through what this means in terms of an organization. And then covering some of the trends, particularly on a global view, but actually the global view and the Nigerian view are aligned completely. And then this FRAML, I think you've all got the idea that it should cover both. So I wanted to make sure we covered that element. Okay, can we go to the next slide? Thank you. Okay, so the Nigerian experience, the latest and best figures we've got are from NIBS, and they date back to the year 2020. So they're not exactly as current as we might like, but you can start to see the trend going up, and we can also see the types of fraud that were being practiced. And 2020 was an important year. We went into COVID. A lot of people were isolating in their own homes. They had a computer screen to interact with the world, and they learnt their game. There was a lot of fear as well in the world. We were fearing for our own health. We were fearing for our wealth. There was the ability to socially engineer people. The fraudster will use that fear or that greed to manipulate an individual, and that's coming through internationally, not just in the Nigerian region. And you can see this. So what does this mean for a customer? When it comes to the cost of fraud, you're a business, you take risk to feed customers. The stakeholders of that business, the employees and the shareholders invest in you, and you then make money from serving customers. Now, next slide. This is all based on trust. So the fact that an investor invests in you or an employer values working for you is an element of trust. They need to trust that they're doing the right thing. They need to trust that the business is doing the right thing, and they need to be able to see a return. Customers equally, especially in a fintech environment, and we've seen many of these circumstances where fintechs have exposed themselves to crime, and it's really curtailed their ability to grow as a business. It's one of those things that goes without saying. So when we look at the costs of fraud directly on the business, we've got this element of trust that's inbuilt, and the ability to be a trusted custodian of stakeholder money, a trusted custodian of customer money. You have three different aspects of the fraud, the cost. First one is the cost of fraud, the actual lost funds of fraud. That's often the one that's reported. That's what we see most of. That's what hits the headlines. But equally, we have operational cost, and that means the technology we use to detect fraud, but also the people we use to investigate frauds. And we also have the lost business. So what do I mean by that? If we're too tight with our fraud controls, we're not very confident that we know what good or bad looks like, we will lose good customers. And that's transactional and application. If you hold up an application and you refer it, or if you hold up a transaction, you are not giving great customer service to good customers, although you might be catching some of the bads. So what tends to happen in a situation where you're suffering from financial crime and fraud is you push down on that fraud number. What that does, it means you say no more often because you're more conservative with your decisions. And you also have to look at a lot more cases. You have to investigate a lot more. So therefore, your cost of fraud actually as a business, although the stakeholders and the customers are happier, actually stays the same. So you really need to think about how we shrink all that together. There's one easy way here of not suffering any fraud, and that's basically don't do any business. But that also means that your stakeholders haven't got an interest in you, and you've got no customers. So we need to find a way here. What we need to do is push on all three sides of that triangle, reduce fraud, reduce the ability to lose business to bad decisions, and reduce the amount of time we're spending investigating those fraud attempts. How do we do that? You can move to the next slide. Okay. This has been practiced globally for a long, long time, and it's often, some of you guys will already be somewhere along this path. First of all, we need enrichment. What does that mean? Just because an IP address, a device, an email address hits you, that's not all you need to know about that character, that identity. There is the ability to enrich it, to know how long that IP address has been in existence, how long the email address has been in existence. Is it correct for the entity that's using that, the identity that's using it? And equally, you know, has there any signals in that data that says it's just been set up, or it's been tumbled, or the IP address is being used for fraud elsewhere? We also, and this is the preset of fraud.net, we are a data hungry monster. What we do is we crunch data and come out with statistically relevant observations. So first of all, anomaly detection. Does the account always shop in that shop every week? They shouldn't really be referred or put in a queue for that. We should know what normal looks like for those accounts, for those transactions, for that population. And that's done by modeling what is normal and then spotting any outliers, any anomalies in those transactional flows. That includes things like mule accounts that are taking too many transfers, etc. So in dealing with anomaly, you get to spot hyper-connected clusters of activity that don't look normal. And then artificial intelligence, AI, machine learning is very much used in this space. Why? We have so many different fraud signals from, or signals about a transaction. The ability for a machine to sift through what data is relevant, what correlations are relevant, far exceed anything of a person to be doing that. Hence, fraud.net was set up with that preset of using the technologies of machine learning to apply to fraud situations. Syndicates are important as well, and we talked a little bit about the initiative in Nigeria to do fraud sharing. And I sit in the UK, where in 1986 we set up one of the globe's first fraud sharing data networks. It's really important to share experience. Fraud should not be a competitive issue, it should be an industry issue. It's criminality that we need to get rid of. And by joining those initiatives, you're showing your willingness to contribute to the economy. In terms of where we are as fraud.net, we watch everything from a syndicate point of view. So any interaction we have with an entity, we monitor, we know what normal looks like, and we know what bad looks like. And all our members would report fraud to the syndicate, and that would shape the way we view a particular transaction. Okay. Operational effectiveness. It's not good enough just to have a decision. You need to be able to monitor that decision, manage it, and put it to investigators with all the information in front of them to be able to make those decisions as fast as possible. And that's a KPI that most of our customers would put over that work queue, the referral queues. Okay, and flexibility. We need to be able to have a system that can build out whatever we need to. So if we need to plug in an identity provider like Smile, can we invoke that at certain thresholds within our rule sets? And can we plug in new data sources as they come across? So really important to have that flexible, orchestrated architecture to bring third-party APIs into your platform when need be. But one of the more neglected items is the finger on the pulse. With fraud, it is a dynamic situation. Things change quickly. You need to monitor, you need to be advised, and you need to be able to react. So finger on the pulse is all about being able to get the business information out of the system, get it delivered to you at times, take it as triggers on particular events, and the ability to then dive in and react when you need to. And that's massively important. Okay, thank you. So in terms of trends, I just wanted to pull a few things out now. A lot of people probably here have never been on a dark web market, may well not be getting marketed on TikTok for various schemes, money making schemes, flip schemes, etc. They're organized. The criminals are organized. That's why we're seeing this exponential growth, and particularly through the COVID times where people had a lot more time on their hands to experience, to explore these things. They are technically advanced. They're organized. It might be an individual person, but you can guarantee that they are taking data from markets. They're buying software as a service to launch attacks on customers. And they're seeing the MOs being shared, so that the way, the operation of doing frauds are being shared between those communities. They are connected. It's technically advanced as well. So we're talking about, you know, really advanced software. Even if you take ransomware, you don't need to be able to code ransomware. You just buy it as a service. So they are technically advanced without actually being programmers. We don't need to be a technical genius to launch an attack these days. As we saw the protections of the major players get tighter and tighter, their ability to do out of band, their ability to spot, put our technology type in to be able to spot anomalies, to be able to spot weirdness, to be able to report and share fraud. We saw a massive move to social engineering, which is the old scams. You know, this is calling someone up and pretending that something's happened. And, you know, we're seeing WhatsApp messages saying, oh, I'm your daughter and I've lost my phone. We're seeing, you know, all sorts of schemes being advertised on the social platforms to draw people in. And we're also seeing targeting after the identity details have been obtained on an individual. So they'll go to them and give them a story, a plausible story. Now, you might consider that the people are not being aware or not being, not practicing good hygiene when it comes to security. That might be the case, but these people are very, very good. They are excellent. So they are taking very, very intelligent people's money off them. I'm never going to call a person that's subject to this a fool, because I don't understand how their belief structures led them into that, where the fraudster does. And then collusion is a big issue. We're seeing a massive rise in what they call friendly fraud. So in a card context, that's raising a chargeback. So saying it wasn't me who did this transaction. Can I have my money back, please? Where actually the goods were delivered to you and we're sitting outside. Never, as much as we've tried so many different techniques to hammer down on goods lost in transit, it's still happening. So that means there's an acceptance from the society that this can happen and this is legitimate. It's not legitimate, it still hurts us. And that even goes to collusion with internal threats. So we talked about that earlier. Essentially, internal threats are huge. KPMG said 72% of all frauds start with an internal informant. And that might be just your procedures. So they could be, you know, in a bar and they could disclose that we don't look at transactions under this level, or we do this at this level. And that's enough information lost from your business for a fraudster to take advantage of. We also, and this is common across the, particularly I'll say it in Africa, which is ID rental. We talked about ID theft. You think about, and we get it in the UK as well. So you think about this context of an actual individual going, actually, no, here's my identity documents. I've opened the bank account and here's the credentials from my bank account. Here, Mr. Criminal, give me, you know, 3,000 Naira and you can use this facility. So we're seeing a huge rise in the ability for an individual to collude with fraudsters to do that. And that's a high level view of of the trends we see, and they're not dissimilar to what we can tell from the Nigerian experience. Okay, we'll move on to the next. And then, you know, this point, I think the survey said this, should there be a difference in this? Well, there is a difference in money laundering and fraud. So what does that mean? Where we've got money launderers, we tend to build a case, we tend to look at it and report it to the FIU, to the Financial Intelligence Unit, that will collate that data and look and connect the dots between schemes. Now, there are different regimes around the world of doing this, but essentially it means you don't stop the action. You don't take action there if you've got suspicion. Why? You would tip off the criminal that you know what they're up to. And that's not what the FIU wants. They want to understand that that criminal is acting and understand where that money is going and where it's to and from. And that's important to them because they're trying to catch the big fish here. And those little reports all add up to big cases. Okay. So there's a difference. In fraud, you stop. You stop the transaction. It's a direct loss to you. So yeah, there's a huge difference between fraud and AML. Watch and report and act and protect is my adage to that. So money laundering seeks to hide illegal funds. So fraud is directly misrepresentation to gain funds, to gain commercially for that fraudster, whereas that money is likely then to be laundered through multiple layers to disguise where it came from. Okay, so FRAML, fraud and AML on a single platform. We're watching every single transaction. We're knowing what's being transacted between agents, between sellers, between merchants. And that data in itself is important for both fraud and AML. Fraud, we make instant decisions. In AML, we write scenarios that our businesses wish to watch and be alerted on, and then report them through without taking a particular stop this transaction action. So yes, it is all capable and all predicates on the same type of data and technology. Okay. Thank you. And then just a summary slide. Okay, so we had this, is it a zero fun game? I think it was the second question. I don't think so. If you don't have controls, you will lose shareholder value. You will lose engagement from your employees. Your customers will leave you in droves because you're cited as being associated with criminal activity. So you're also suffering losses to reduce that fraud. And also, you've got to get that operational efficiency to be able to understand the data that's coming through, be able to understand how you're interpreting that data and reapply that through artificial intelligence to constantly evolve to get that cost of fraud triangle as small as you possibly can. Okay. And the one thing I'll leave you with here is trust is, it's important to you and your business. Trust is the vital thing that keeps you alive. Invest in trust. Thank you.
All right, thank you, John. So moving on to the last poll for this webinar session. And if you have any questions for Gbolabo and John, kindly please put it in the chat section. So the top poll is, how confident are you in the organization's ability to detect and prevent financial crimes? Okay, so there are very mixed replies. More of the somewhat confident and more and very little around very confident. So guys, do you have questions for John or Gbolabo? Yeah, we are still getting more replies around the polls. So this is what our responses look like.
Okay, so the polls look quite interesting, though. You know, people are somewhat confident, which is a good thing. I think the awareness is out there, but and it's a continuous drive. We need to continue to keep talking about this, keep looking at our systems. What I found exciting with the services John talked about is the combination with fraud and AML. I know lately we've been getting a lot of requests for AML training. So first is the awareness, understanding, getting your internal operations to understand, what AML is about, and so they won't unknowingly be part of a fraud scheme. And the next steps also for organizations is to see how they can integrate, an effective fraud management service into their operations to protect, customer funds, protect their business too. I think we have a question.
Yes, I think we have a question. The question goes, how can organizations enhance their internal controls to mitigate the risk of financial crimes?
John, do you want to take that away?
Yeah, absolutely. A big question, a really valid question. How can you do this? So I deal with this question all the time. How can we do this? And we see people that have got worries about internal fraud, the agents, and how that operates. We see different products with different fraud rates, or new products where extend the exposure. The main answer, and I'm not going to say this is the answer to everything because we need to dig into each individual item, is to be watching everything. So the more data you can compile about how those transactions are happening, and the more trust you can get in your delivery of an outcome. What do I mean by that? Being able to recognize fraud or bad debt is really critical, because how are you going to improve unless you know what that outcome is? So if you have this in a data lake, so where that from the level of the entity, so the entity, the device, the IP address, the email address, the physical address, the delivery address, all this wonderful data, but equally we're overlaying data about each and every interaction with your organization. Which agent did this, which branch did this, which product did they take, etc. It enables us then to, the AI to work through that and spot where those suspicious behaviors are, but equally you as humans to be able to see spikes and correlations that matter in this. So understanding, monitoring, and being able to see and manipulate the data across your whole organization is critical to be able to spot any pots where we need to take particular action. I hope that went some way to answer that question. It's a big, deep question.
Yes, I agree with you. Thank you. Thank you, John. So do you have
Sorry, also, John, can you please share, so people might be interested in knowing if they need to get a feel of the service, proof of value, demo sessions, how easy is it, to engage?
Sure. There's two ways we prove, and prove value is massively important. We talked about the total cost of fraud, how we're going to impact that, what's it going to do. And there's some things we can't measure in those business cases, but we can measure direct costs of operations. That triangle, we can measure that. Essentially, we do that in two ways currently. The first one is when we board data, we bring a client's previous data on. So 6 months to a year's data as usual. Where we can look at anomaly, we can overlay then our intelligence from what the ML would tell you and any rules that you might wish to insert in the system, and we can turn out a return of investment before you've even switched the system live. Equally, when there's live, we need review dates to make sure that that's happening. We have algorithms ourselves that look at degradation and drift in performance. So we're always trying to head to a metric, a series of metrics about false positives, false negatives, fraud catch, and accepted clients. So a very scientific view to that as well, because this is essentially, when you break it all down, all about data, all about observations, and seeing what risk lies there. So we do that in two ways.
Okay, so we also have another question, John.
Okay. Specific industries and sectors are more vulnerable to financial crime. And I think we can say that, you know, the most attractive to financial crimes where money's changing hands, it's as easy as that. It's not the only place where fraud happens. There's all sorts going on. But essentially, fintechs, banks, payment processors, and down to merchants is where we see the majority of use for our types of information. There are things that we don't deal with, that we're very aware of, and the same technology applies and the same adages applies, things like telco or electricity, where there's fraud happening, but it's not a monetary value. The techniques we use are exactly the same, but we see and propagate our technology mostly with the fintechs, the banks, the payment processors of this world. So where there's a value changing hands.
Okay, thank you, John. Gbolabo, is there anything you'd like to close with?
All right, thank you. So John, it was a pleasure having you on this session and sharing, you know, some of your services and, you know, insights, you know, from a fraud and AML perspective. I also want to thank everybody that has been on this session, you know, to join us. You know, we look forward to you reaching out to us to, you know, maybe get more information or request for a demo, or maybe just in additional information. So we position ourselves as a trusted advisor so we can have conversations and just look at how you are currently set up and what challenges are you having, and see how we can work with you to help curb fraud in your environment, or, you know, put, you know, adequate controls in place. So we thank everyone for joining us. Thank you, John, and we look forward to our next sessions. Thank you, everyone.
Yeah, thank you, guys. You know, it was a very exciting and informative session. It was a pleasure to have you guys on here, and hopefully we'll have more webinars around fraud and anti-money laundering. So wish everybody an amazing day ahead. Enjoy the rest of your day, guys.
Yeah.
Bye.